Guys, what a morning. So, it's time for us to get straight into it. How is everyone going today? I can tell you what, I'm feeling fine. I'm feeling dandy. Is that even a word anymore? I don't know. Let me just get this resized for everyone so that you can see my screen. Have you checked out these bank reports? Jamie Dimon. That sneaky cat. Looks like JP Morgan has done quite well. One sec. Jamie Dimon. I mean, if you have diamond in your name, it's kind of like diamonds. It makes sense you're going to be pretty good at stealing money from retail traders. That's only a random opinion. But anyway, from the perspective of JP Morgan, they've done pretty well. Now, the market is going down pre-market because while it's a great announcement and they've blown it out, what do we always say? The market is optimistic into the event. And that seems to be what's happened here. Optimism, optimism, optimism. There could be some good trades here, though. Goldman Sachs also earnings blow past estimates as investment banking revenue boosted by strong, terrible IPO market. This is why you don't want to buy IPOs. At the moment, everything's worth something. That I have not seen much in my career of trading, I've got to say. You don't often see every IPO just completely blowing the book. You know, I was involved in in a lot of what we call hybrid bonds here in Australia. And these are a different type of bond. And I'm always in those kind of pre-market, IPOs, let's call them, for the markets or initial bond offerings. And I've never seen the market as hot as it is right now. Rates are so bad, yet people are clamoring to get the action. And you're getting 20% fills of what you want, 30% fills, incredibly small fills of what you're asking for. And it just shows the heat in this IPO market right now, which is going to be excellent for banks. Again, I see it all as a sugar rush. And you know what I feel about banks? I think it's like this. Now, and then we go sideways for quite a period of time. So let's talk about the actual technicals here. Do we care about these fundamentals? Well, ultimately, unless you're a god of reading into them, you will have to make usually a longer term decision on it. Now, remember, when it comes to banks, when it comes to investments with the fundamental perspective, you're not making a knee-jerk reaction often to these results. You're basically looking at it, you go in with an idea, and your idea, because this is how I do fundamentals, is are they meeting the expectations? If not, do I think it's a sandbag of their earnings? Is there a one-off charge? Is the market overreacting to it? What is my 1, my 2, my 3, my 5, my 10-year plan on it? And once you understand that, it's very easy to fundamentally invest once you see the information. You're automatically going to know what you're looking for. And if it knocks it out of the park, awesome. And if it doesn't, then you can start trimming orders. The power of what we do on this channel is always going to be that you want to bring together the technicals and the fundamentals. So let's have a look at JP Morgan to start off here today before we get into where the market has really got action on it, which could be the tech stocks. And let's have a look here. We've got a trough, we've got a peak, we've got a higher trough, and we have a higher peak. Now, this is JPM, 1.43% up yesterday. However, down this morning, 0.94%. And you think, well, that doesn't make any sense, Tom. That's stupid. Why would it be down there? Look where it's going to open up. Is there any reason why it might open here? Previous resistance, moving averages, breakout yesterday. The market was heavily optimistic into this. And that's what we always want to realize about the market. It will run into an event, and unless the event is literally well over the expectation, so often this will be what it is. The expectation, so we've set with a barrier like here. If you could give a rating of 0 and 10, where is the market generally got its expectation? Guys, I want you to put the number in right now. Where do you think the market's expectation is coming into an earnings announcement? Between 0 and 10. I don't want to see no 11s and 12s. Where do you think the expectation is generally for the market? It'll be awesome. Let's check it out. Roctopus says sell the... Oh, no, wait. Dr. Horton says sell the news. I don't think that it's necessarily sell the news. I think the market is pulling back to a key level of support. So let's see what people say. Jam says 8. Dr. Horton says 5. STM says 7. 10. 12 says PK sub and 12. I knew you guys would all go over the top. 10, 10, 10, 10.5, 1,000. I thought someone would say 999 or whatever it is. 9,999. Look, in my opinion, my humble opinion, it's usually between an 8 and a 9. Now, this is in a market that's going up. So a market that's fearful, of course, then you're going to be looking at like a 5. But a market that's just steadily going up, or a market that's euphoric, or a market that's coming in with a bit of, bullish momentum, it's going to be in that 8 or 9 bracket. So what that usually means is that we don't just, let's consider 5 hitting the mark. We want to see it smashing the mark, because otherwise the price is already packed in. So just always remember this with fundamentals, with when you see a thing and you think, well, that makes no sense. They made $100 billion more than they were meant to, and they didn't even go up. It's because the price is already packing it in. Always look to the lead up to the event. Okay? The lead up is super important. When you're looking at a bank like this in Australia, this is just an Australian bank, and you see a run from $85 to $106, does that give you confidence? Let's say the earnings comes out the next day after this. How much do they have to kick ass? They have to smash it out of the ballpark. So always remember, it's not just if they just hit or even beat by a certain amount and you see that in the mainstream media, the price action will tell you the true story of how it looks. So firstly, JP Morgan, it is sitting at a key level of support coming into this open session. I don't think that's too bad. Let's have a look at Goldman, and then we'll get into our normal information here. We are also 9 minutes away from CPI data, I believe, which we'll be talking about shortly. So another one with a closure out, actually pre-market up here 0.39%. So this is another bank that has a trough, a peak, a higher trough, and a higher peak. As far as I'm concerned, and I haven't looked into these numbers deeply, I'm not seeing this as a problem for the market doing exactly what we hope it does during July, which is go and hit our community trend lines. We need this thing to do everything for the people, and the people are you guys. We need it to go to the trend line, we need it to move on up, and we need XLF to hold the line, because if it doesn't and it starts falling through, that would be quite negative for it. Here again is XLF. Notice how it looks kind of like every one of those banks. Goldman was out stronger. The price action is conferring with a very strong result as well. JP Morgan came through stronger than XLF, the entire finance sector. Again, they've got a pretty good result. So we've got trough, peak, higher trough, higher peak. But we're not here just to talk about banks today. I just think it's pretty important that we always understand that their market is optimistic for an 8 out of 10 as far as I'm concerned, whenever the price action is bullish over the point. Silver Liner says, anytime you're at record levels, it's risky. That's true, Silver Liner, but sometimes you can see cyclicals that are in there for a long period of time. So whenever you're at all-time highs, that's a big thing. But it's also how did you get to those all-time highs that becomes important. And maybe that's something we should look at on these markets right now. So we all know that we have our giant community trend line in here. We all know that I have an expectation, and maybe the community does too, that we're looking towards this being our level that the bears may take control of the market. We've also got to look whether the market's been healthy. And, some people will say, Tom, this market's out of control. And from a monthly perspective, it may be. But from a daily perspective, at least it has been, relatively speaking, doing some pullbacks to the 50 exponential. But when we go out to something like the weekly, it paints a picture of a pretty vertical case, which it's done before. And then we go to a monthly, and it presents even more crazy. And then we move over to an SPX, and you go to the monthly, which is the full data, and you'd say, whoa, that looks out of control, man. Yeah, maybe it is. You know what's got me thinking it's out of control? Can anyone tell me what they think and what I think you need to be concerned of when you follow the trend? Don't get me wrong. Trend's up, guys. Be optimistic in the market's always best. But you know what has me concerned in this stock market right now? There's one key factor, which I believe will mean either a slowdown or a bit of a chunk down with a slowdown of recovery. and that is how far we are away from a certain key mean reversion indicator. Let's read this. Joseph de Celsa, $9.99, very generous donation, by the way. Give Joseph a few claps there, guys. Thank you very much. Hey, Tom, just wanted your educational content on how to be a successful day trader. I have a real love for the stock market, and I'm not looking to drive a forklift my whole life, lol. No worries, man. Appreciate what you do. Look, I think one of the things that you need to really think about is going to be slow and steady, man. If you're looking at being a successful person in anything, you've got to go from the slow and steady wins the race. If you're trying to make $1 million from an AMC trade, you might be one of those lucky few and you might be like, oh yeah, I made some money. Or, unfortunately, you might be the person that loses your bankroll or your investment roll and it all goes bad. When you invest in SPCE, terrible thing, and that would not be good. So look, there's two ways of really doing it. The easiest concept in many ways is actually selling premium spreads on options. The reason why is because options are incredibly expensive. And when you learn doing premium spreads safely, it's all about risk management here, you can slow and steady earn some pretty good percentages because you're effectively kind of like the insurer. The other thing that you want to do is look at swing trades, man. And you need to realize that it's not every single day that you're going to be taking trades. There's going to be a week every so often that you're going to go ballistic. And that week you might even have red eyes because you're going to just find opportunity after opportunity and you're going to smash those opportunities. But then there's going to be weeks where I'm sitting here doing live streams for you guys and I'm like, it's pretty boring right now, guys. So I guess to answer the question, it's slow and steady. There's two ways of really getting there. One is premium spreads and premium in general with risk adjusted. You can't just go and sell a put and not know what you're doing. You can't sell naked put. That's not a good idea. But a lot of people use spreads to make a lot of money over time. And that is definitely one way. And the other way is swing trade based day trading. I think swing is the best style. It also will work well with your current forklift job. It won't take as long. Let's see if everyone got this one right now. Let's see if anyone got this. Did you pick the moving average that I hate? The 200 to the monthly. No. It's definitely this one, Tolga. The 20 exponential moving average. We did this yesterday. We went to a line chart. And what did we find? It wasn't rocket science. Throughout all of history, you will find the 20 exponential moving average is an incredibly key pullback zone for healthy corrections. Now, if we think about how far we are away from that right now, holy moly, 20%. 20%. 20% is insane, guys. Come on now. Let's have a look how far away we got from it up here in the heights without retouching it. We weren't even far away from it there. You got to remember, I was actually angling it. So here, 31%. 31%? Probably around that? Not even. Because I'm taking it from this point. Let me zoom in over here. What was the worst we've ever seen? Let's have a look. I reckon we could be at the worst we've ever seen, actually. Let's have a look. Ooh, very close. So if I was like a crazy long-term investor head honcho, let's say right now, and I was looking at this chart and I'm thinking, I love to buy the S&P 500 and hold it for 30 years. Do I think it's the best time ever? Hell no. Do I think that it is a interesting time for trading? Absolutely. Do I think it's an interesting time for certain stocks? Absolutely. And that's why we're bullishly optimistic on the market. My God, even I didn't realize it was 20+% away from the monthly. But I do know, we always have a plan and we know what we're doing. At this stage, we're bullishly optimistic. That's what we're doing. That's right. So for the S&P 500 today, what have we got going on? Well, firstly, we had a nice closure out. You can notice this morning, we're basically opening flat. I'm actually less interested in the S&P 500 and I'm more interested in this one here, the old Dow. We don't talk about the Dow very much, but it had a nice breakout over here. We saw the weekly with the breakout. I talked about that, how it was really important. Then we saw another closure. Let's say we pull back a little bit here, a lot of banks in here. I think the banks so far have been, pretty good earnings. They're definitely hitting that kind of 8 out of 10 expectation, 7 out of 10, 8 out of 10 expectation. So hopefully that can kind of hold it through, though I haven't had a chance to look into them that much. We have that resistance that could become support and see further bounces. So I think the Dow definitely is of interest. If we go down to the 1 hour time frame here, you'll notice it's dipping a little bit in the futures. 50 exponential moving average on the 1 hour has been picked up once before. 50 exponential is currently sitting right on the previous resistances. So that's something I definitely look for. Previous resistance becoming support on a moving average. It's the bread and butter of what many people do. Then you go and bring in Fibonacci's. You go and bring in maybe a 1 minute chart, look for lightning bolts. You guys know the drill. Now, we just saw CPI data come out. My God, and I missed it. Sorry, but it's not working out well, is it, for the market? Let me get the CPI data up here. Okay, I was ranting too much. So CPI data has come out. Obviously, the market did not initially like it. 0.9%. Yeah, that's not good. So what 0.9% means is that the Fed can talk about tapering. Remember, we do not want good news. No good news. Bad and hit. Not good. 0.9% CPI. That's pretty far off from what their expectations are. Usually this won't move the market at all or very little, but that certainly is a bit of a thing. So it may send an initial shockwave, certainly did through the Nasdaq just then. You saw that CPI number came out and it instantly sent a shockwave through here. This is purely based on the BS of the fact that the Fed is going to be able to potentially say, hey, things are going good. It's all going good, guys. Let's talk about tapering. We don't want to see that. And this is why it's an artificial market. We know, like, whenever you have good news or news coming out that is, doing this type of thing, and basically we're seeing a market where we're completely stabilized by the Fed at this point, it's sick in some ways. We need the numbers to do it, but we also don't know where is the fair price. Where is the fair price exactly of the market after stabilization money gets taken away? So yes, the CPI just came out then, guys. If you're not aware, 0.9% was the number, and that means that it was well over the forecast, and we always know that when it's well over the forecast, that is not exactly what we're wanting to see here. That's 3 consecutive months. I wonder where it is. I don't have the data on it right now, but I wonder where all of this CPI is coming from. Is it from what specific thing is actually triggering that through? Very important we actually dial in on that news. And the market will be digesting that now and trying to figure out what it's going to do. Silverliner says, you nailed my favorite trading, Tom. Sometimes my day trade becomes a swing trade. Fair enough, yeah. So we saw then that the Dow almost got straight down to the 50 exponential. It's bouncing a little bit as they digest the news. Dave, if you're there, man, can you possibly get... thank you very much for sending that through, by the way. If you could possibly get me the rundown on the CPI and send it through, that would be sweet if you can find that. If not, no worries. Philip Lee, hey, Tom, used your affiliate link for TradingView. I hope you get some commissions. Thanks very much, sir. I will. Well, I should anyway. Who knows? They don't let me see it, guys. I don't know what comes in, but I appreciate you clicking the button anyway. It's all good, man. Admit, that comes at no cost to you, by the way. Absolutely no cost. They just have to give me some of the cheese for what is a very good platform. I use it for a reason. It is the best TA software out there. Maybe it's not the cheapest. Maybe it's not whatever else, but I think it's the best. It's cool customization, and over the years, I've seen it grow and improve, and that's very, very important. Now, we've got a question coming in here from Amit, and I do have a couple of other super chats that we need to talk about in just a few moments. But in essence, that CPI news needs to be broken down, and I don't think it's enough to really knock the markets around heavy. It's probably just a futures fake. However, now it becomes even more important what's the Fed going to say, and therefore that's going to be another bit of news that we have to worry about. I hate it when we have to worry about artificial Fed news. Doesn't that suck? Wouldn't it just be cool if like normal news was good? So much easier. So much easier. People are messaging me about gold. We'll check out gold very soon, Nick. Don't worry. So Amit gives me AED $100. Thank you very much, sir. And he says, Tom, I just want to donate AED $100, which is 27 bucks, possibly American or odd, I don't know, but thank you. Let's give some claps to Amit here. Thank you very much, Amit. Appreciate that. And he says, for all your support, it has helped me recover my portfolio from the dust. That's good, man. I'm really happy for you, dude. Appreciate what you do. Cheers and keep doing good work. That's awesome, Amit. But firstly, I want to say congratulations, man. But I also want to say, however you got back through, whether you've been focusing on making more logical decisions, not having the FOMO, not having that greed and stuff like that, and following the price action, I'm really hope that you can stick to that plan. In fact, whatever's working for you within risk adjustment parameters, remember, write that stuff down. Whatever got you to the dust, hopefully it's not some meme stonk, whatever got you to the dust, I don't ever want you to do it again. So whether that is, and sometimes you have to do this, guys, whether that's you put some notes, you put $100, staple it or stick it on your screen so you realize it's real money. You have a business plan for every one of your trades like we do in our course where you have it all written down, man. And you just sit that in front of your screen. I don't care what it is, a post-it note that says don't be foolish. Don't feel the FOMO, anything like that. Make the informed decision and put it in there. That's awesome though. Thank you so much. Get you some massive claps out there. Very happy to hear it. Yeah, no, I need the breakdown, Dave. I need the full breakdown of the numbers. Thank you, though. AJ coming in 8 minutes ago. Missed your one there, AJ. Super chat $5. Hi, Tom. I'm trying to learn to be a better trader. I know a correction is coming. I was wondering how long these dips usually last for. About 2 to 3 months, man. Not very long. So generally, a normal dip will last around, let's call it 1 to 3 months in the current markets. But generally I say 2 to 3 months before recovery. I did a bit of analysis on this years ago. That's what I found, especially when I was doing options timing and stuff. 2 to 3 months was about right. And then, of course, a GFC global financial crisis, or what would have been the pandemic crisis, usually 12 to 18 months. Now, that didn't happen this time around. Most people that had been in the market for a long time expected the Fed never to go as fast as they did, never the Eurozone to go as fast as they did with monetary policy. They obviously saw a storm coming. They didn't want to deal with the press conferences or the problems, so they just stabbed some money in there. They just went, psh, fill the gap, fill the hole, guys. Not our problem. We'll be dead by the time it's our problem. It's all good. So yeah, to answer your question about I like to say 2 to 3 months, usually around that. Maybe 45 days plus. Yeah. You can actually go through, get a timer, and just look at the last previous dips. If you go and have a look, you can even see them on the monthly. So when you go out to the monthly, when you're looking at dips, let's say this one here lasted about 3-ish months. See? Then recovered. 3-ish months. 3-ish months. So that's the type of thing you're looking for. 2 months. Obviously, it should have been 12 to 18, and then another 1, 2 months, 2 to 3 months. So yeah, around 2 to 3 months, man. Yeah. All right, so we do have a bit of down action here this morning. It'll be interesting to see whether the Dow actually picks it up. Daily again, or not daily, 1 hour again is where we want to be looking at here. And I'll be interested to see whether it spikes back down through this zone. I'm not overly concerned. I'm going to bring the numbers up right now. Okay. All right, so CPI rose. Consumer Price Index increased 5.4% from a year ago, the largest jump since before the financial crisis. Yes. And let's have a look here. Stripping out the volatile food and energy prices, the core CPI rose 4.5. All right. I'll have to go into it even more than this at some point. But realistically, it's not good because we don't want that number to be too far off what the economists think. Because then all of a sudden the Fed can be like, we're worried about this and that. We are worried about this and that. I've posted a breakdown in your public Discord, Tom, says Simon. Thanks, man. Let's have a look. Let's go up here. Simon. Oh, yeah. Thanks, mate. This is exactly what I want. Thank you. Interesting. Wowzers. That's a big used car trucks. 10.5 on the number here. So these are the numbers you really want. This is definitely the one that you want to bring up when you're not live streaming. And I do appreciate this, Simon. Let's give some claps to Simon. That's good. So 10.5, definitely you've highlighted the correct numbers here. And then we've got the fuel gasoline here in June, which is also a surprising number. What I'll be interested in is medical care. Wow, I expect that to be better. Apparel, 0.7. Okay. Services, 0.4. I expect that to be higher. Transportation, 1.5. So it's still sugar rushing cars. 10.5. Interesting. That's a big number. Yeah. So, little bit different to where we thought the money might be going. We thought maybe services should be where it is. I'm still convinced that is where the money's going to go. Apparel dropped, which does not surprise me at all. But the used car and trucks, the market is on fire. Fire, guys. Look at that US 100. Looks terrifying. But we need to remember that's a 1 minute chart. As a percentage, 0.59%. I expect it to recover. Recover, damn it. It's only the cars, guys. It's okay. It's the cars and oil. Well, what can you expect? It's cars and oil. It's all good. All good. Let's have a look at gold. Gold firing at this stage. That's why you guys are going on about it. Yes, look, this is a classic nasty breakout, fake out, demon pattern is what we're going to call it. Because when we go to a 2 hour, you go, look, it broke below. And this is why I'm very, very conscientious of these kind of closures. Do we get below this low? No. Do we get below a very key point? Absolutely. We fully reverse that, create a daily, pin bar hammer rejection, and then it goes through. PK Subban says, sell your crappy used cars now, guys. I tend to agree with you, PK Subban. Yes. I sold my car. I actually got surprising money, but the ridiculous thing is the car I bought last year is worth more than I paid for it then now. I bought it new. Stupid. Is that ridiculous? It's worth more than I paid for it, and I've owned it for a year and a bit. That is some crazy, crazy tobacco stuff. So is this a breakout that we like on gold? There's a few factors that I like here. Number one, I love to see consolidation underneath the breakout zone. I'm actually going to go into a 15-minute here for gold. Wow, look at that. That looks fake. Let me have a look. We need to use... There we go. Much cleaner. Got to fix that. That OED gold data is no good. Look, I like... This is a nasty bit that happens with news sometimes when you're scalping. I like the breakout, but because this is caused by the CPI data, I want to see a real time frame breakout. If this was not CPI data related and I saw this type of movement and it closed above here, I'd be a lot more confident in the move. Because we know it's related to news, we're going to need to go to probably a 4 hour chart and wait for a closure above this zone. If we get that, what are we saying? Rejection wick, confirmation. Let's go on the party train, hopefully to the 1840, 1845 zone. Why do I say something like that? Because it just makes sense. Where's the next level? Do you guys, you could say, the 200 here, Tom, at 1830. Come on, man. Who's looking at that? Who's looking at that? The next level should be somewhere around the resistance, the support zone. So if we get the breach and closure, which is really important, then it should be able to get through that zone. I don't mind it. I want to see more from gold. The market is overall recovering okay from where it's been. So we'll see again how that's digested. Shanghai Composite was one we'll talk about a little bit later. US 10 years didn't move much at all. And how did the bond market react? Let's have a look at the 20-year. Bond market did nothing. Okay, cool. Dr. Horton says Tom buys his car high and sells low. Nah, man. I just beat that thing into the ground because cars are nice, but they're not good when you're trying to compound your money. We've got George Christo Dulo. Wow, I mispronounced your name, man, but thank you very much, George. Canadian, $3.99. Hey, Tom, love watching this in the AM. Let's do some AMD and some Etsy. We could do both of those for you, sir. Absolutely. Thank you very much, George. So bonds did nothing. They didn't move. Market initially took a shock, hit the 20 exponential on the US 100. You can see it's bounced a few times off that, but we do prefer the 4-hour 50 for dips, and then it's bouncing at this stage. I think it's okay. We can stay calm. It's mostly in the cars and energy where that CPI is blown through. So let's get into AMD and Etsy for you. Etsy was a good trade the other day. So AMD bounced off this zone. If we go to the daily, it's a daily 20 exponential, previous resistances, supports. It makes sense for this to be a good level. Yesterday's price action, you could say it's lackluster. This morning, 90.60 is where it's trying to open, which is around here. There's nothing really wrong with that. I feel okay with AMD. I don't really have any problems with the stock at this stage. I'm looking for it to go back up, test the 96, and then possibly even... I think if it gets past this level up here with the closure, you're going to blow 100. The reason why is because we've never had a closure above 96 on the weekly. See that? No closure. When you're looking, remember, top down, go through the time frames. Even if you're trading a 5-minute chart, I don't care. Go through the weekly, go through the daily, go through the 4-hour, down to your 5-minute chart, and understand the key zones, because once you do, your 5-minute analysis is going to be even better and you're going to kick some ass, that's for sure. 96 though is the zone that we're looking at for a breach, and I don't mind this price even in here towards the 96. Pending the market does find stability, that should be okay. Let's have a look at Etsy. Check out Etsy. This weekly now. See the breach that causes in for bullish movement? That was really nice. Now, we talked about Etsy right here. I remember discussing that. I think it overshot. So what that means is that my expectations for Etsy ended right on 200-ish. I think it was between 195, 200. That was my end expectation for it, for the trade itself. And it got there in the participation phase incredibly quickly. If you're wondering how to trigger these events, just think about what's happened. We have resistance, 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 bullish hammer, closure above. That's a go signal. You take it. Why? Because it's consolidated for so long. You then see also the volume is increasing into that breakout. It makes sense. Remember, all these stocks are inherently bullish animals. The stock market is not a bearish animal. It doesn't go hunting. It only hunts salmon a few times a year. The rest of the time, it lives up to its name. It hibernates. The bull is constantly chasing people. The bull doesn't relent. It never gets tired. The bear fattens itself on the salmon and goes into the cave. And we need to remember that. So these are mostly bullish vehicles. We get the closure above. Very nice. It overextends, which is what I call like an excess phase. And then we've pulled back to the daily 20, which all hyper stocks mostly have at this stage. I'm feeling all right. Long leg doji on the daily. If you're looking at more bullish longs, probably want to see the 200 closed above. When that happens, you'll probably, I think you'd smoke this high. So this high would get taken out, and then you're going towards 220 after that stage. So see how it reacts around the long leg doji. This is going to be the key. Long leg doji, I want to see decision made, 200 plus break, close, and then you move towards 220. There's plenty of cheese still available in that one. Plenty of the cheese. $77. Oh, wait. We've got Taurus Trader. A true bull. The Tauros. Becoming a member of the Stonk Squad. Thank you very much. Sorry, I was a little bit behind there, Tauros. Appreciate your membership. And we also appreciate $77. $4 for the coffee. You're the man, $1. You never stop. It's awesome. You are probably one of the first supporters of the channel, so I appreciate you. I think you got the super chat started, $1. And you know I appreciate it. I don't forget your names, guys. I remember most of you, unless you have a really long name, and then I sometimes forget, but what can I do? It's sometimes hard, you know? And then I will read this out. Mitchell Miller. Holy moly, Mitchell Miller, $50. You guys are in the spirit of giving. Give Mitchell a quick clap, guys. Wow. Thank you very much, man. Hey, Tom, you're still the best. Obviously, you must have been watching that AMC TA, man. AMC TA, please. Where is the best technical re-entry point? $38 on the downside and $52 on the upside, question marks. Well, firstly, man, thanks for the 50. That is a very generous donation. And yes, if you've been watching the AMC TA, which I assume you must have because it sounds like you're out of it, it's had some good trades, hasn't it, man? It's had some good trades. We certainly found the weakness here into the $40. I was very bullish and optimistic at the $40. And now, dude, it's tough, man. Because do you really want to buy the 40 again? You know, I know it's opening at the 40. It's 40.85 right now. You've got to make your own decisions, Mitchell. You know this. But, ooh, the trend is not your friend here. I wish I could tell you, hey, oh yeah, I think this thing's bouncing. But we have to put together what's the price action telling us? The price action's saying that every rally is kind of crappy. You know, look at these rallies. They're all crappy rallies. And that they've come through and we haven't seen nice bullish action. If you're wondering where the perfect entry is, you're never going to get it exactly with AMC. So you're saying $38 because it came to 38.70. If it went to 38, that would probably be quite bad. In fact, I would think at that stage you're going down into the the devil's dungeon in 32, because that's where that's the next kind of zone. I don't specifically like this trend line down. I feel like this is fairly negative. I also think that if you do see a 40 bounce, it may be short-lived here. So $40. I loved it the first time. I don't like it as much with the current price action that we're seeing. This is the zone, though, right around that 40.80 area where it's pretty much opening. And you know I've got a 40.53 as my previous support, which I never changed. Yeah, that's the zone that I feel like if it's going to bounce, it's going to bounce there. If it doesn't, we could be looking at a brutalization of AMC. And I'm not even kidding you. I've thought about this and I thought, if it gets through 40, I mean, yes, it might stop at 30, 32, but I kind of feel like it's $20. And that might sound insane, but once they create fear in the atmosphere, and of course they create fear in the investment, it's surprising how many apes will lose control of their own, and they'll press that button. They'll be like, oh my God, I've got to get out. And I know quite a few people that have called me. These people don't know what they're doing. Believe me, they don't know what they're doing. And they've said, Tom, I've exited. They have no idea what they're doing, guys. They literally bought it because they thought it was funny. And they got out right there. Now, they didn't watch the TA channel, believe me. But I know they exited around here. They said, it's done. I made some good money. They were not the ape supporters. They were nasty, hodling, for a time, smooth, very nasty apes. Because they didn't hold with you guys. But they got out. They didn't care. There was no movement for them. There was just the profit cow. And they left it around. They left the building around here. And a few of them left the building when they got bored because it didn't go up enough. And that's the problem with these things. It's all about fear and greed. And if the fear comes in and we don't bounce exactly around this level here, I could see it getting, hammered over multiple days. Look at Space. Admittedly, a much crapper stock. Where's my Space fan? Hello, Space fan, the one that gave me the donation the other day. Did you get out? Did you bail from Space? I hope you made the right choice, sir. $77. We'll keep going, Mitchell. I'll go back to AMC during the open for you, man, because that's a very generous donation. $77, Super Chat $5.77. Good morning, Tom. SPCE. Another bounce this week, question mark. Near $50 potential possible this week. Sandola, why, man? Why are you messing with this stock, bro? I hate this stock so much, man. Please, Sand Dollar, please. Oh my goodness. Well, you do have a few. You do have a few meme stocks all going to the same supports: resistance, 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 and yes, this level could become support. It's at the same time that AMC is also hitting the level of support. But Sand Dollar, my opinion, I believe it's over. Okay. AMC and GME. I'm all in for the idea that those are the two concepts of actual hodling space ape people. However, this one, no. That is the pumpy dumpy, Sand Dollar. And really all you're doing is you better be willing, and I'm saying this right now, you better be willing that if you're going to enter this position here and you're going to catch the falling knife, that your position could be worth $25 in 48 hours. Because that's the kind of dump that I expect here. Let's look at the facts. The facts are it hit a resistance almost like the other one. It went back up and hit 53. Richard Branson didn't die. It hit 53. Okay? And then it was a sell the fact. So it all comes down to how many people are talking about it. And the best place for us to find that, by the way, message volume up quite hard for Tesla fans. That's good. Let's go and have a look. What is ranking today on StockTwits? Most active. It's not. Space is number 3, man. Let's have a look. Message volume. Or lots of raging people. Let's have a look here. $15 very soon. This is the real price for this stock. Yet forever MNKD is bullish. There's lots of bears here. Lots of bears. And a few bulls. So, yes, with the amount of chitter chat that's going on, it's the last ditch effort is right around here at the 38. Good luck, Sand Dollar, man. I don't know what you're doing with it. Let's resume some of the stocks that I'm looking at right now, though. Firstly, I want to talk about Shanghai Composite. Shanghai Composite did something pretty damn cool today. It gave it a damn good college try at breaking out of a nice double bottom after the pullback. Now, this is the Chinese market, if anyone's not aware. Double bottom. Consolidation underneath the break above 2 hour. Market is closed now. So you can see break above. Go to the daily. Decision made. Question. Look at this. Long leg doji. Decision made. Shanghai Composite doing all right over there. It's doing all right. We have to go back to the market again because it's falling. But yes, that one is doing all right. Let's have a look at the barbers. Where are you, Baba? We'll bring all of the Chinese stocks together. Where's JD? There we go. These are some of the big ones. So we've got the Barber up 1.76% in the morning, 209, right into the previous resistance, okay? Previous support becomes resistance, We've got Baidu floating around 183, again going into the level. And then we've got JD looking a little bit better here. 74.30. Long leg doji, potential decision made today. I fully expect if the markets can hold up again tomorrow, that these stocks have hit bases that make sense, technically. They make sense, guys. We have here effectively a very nice candle pattern. Remember, it's a gap down showing us weakness in the market. We have a little bit of indecision, which is good. And then we have a gap up with a big bullish close, with a long leg doji, with a potential of decision made bullishness today. These stocks, they've got to be around. Now, obviously the risk is the government, but the government is unlikely to beat them down any more than they already have, considering that we're on support and the Shanghai Composite is breaking resistance. That's the type of combo that I look for in the markets. That is the type of combo. All right, let's go back up here. What's going on here? US 500. All right, let me share the US 30. Come to me, Dow. Okay, 1 hour. Where's our 50 exponential? We're very close. Okay, so the market is coming down here pre-market. CPI data. People are weighing up whether they believe the Fed is going to take away the sweet support and it looks like we're going to open straight on support here into the market open. We're only half an hour away from market open. Only half an hour away from market open. Support, question mark. This is the area where the bulls must regain control of the Dow and therefore the rest of the markets. So we'll have to watch that very closely. Let's have a look through some of our favorites quickly before we do Tesla. Square down 0.64. NEO down 1.27, which is ironic because it's a car company. Let's have a look at Webull. Let's bring up the Webull thing. I forgot this computer crashed when I was making a video today, so I lost all my data. Let me just quickly bring this across. That sucked. I feel bad for content creators. You do all the edit and stuff, and then it just crashes. You're like, no, I lost everything. Got to start over again. Probably should have pressed the save button. So here we go. Baba up top, Baidu up the top. The Okta also doing well. What's in the downside? We've got Boeing down hard, 2.32%. Maybe we'll have to look at that. Coinbase down, Spotify down, Shopify down, all Roku down. All the stocks that have been up the last couple of days are down. And in the speculation list, it looks like Nokia is up 7% randomly. Other than that, mostly AMC and the other stocks are down. So we're down in the morning. Let's look at Tesla. Only down 0.29. This is a good sign for Tesla. Very, very good sign. If it can hold, like, think about these scenarios. It pulls back here, hits the 20 exponential on the 1 hour, finds buying pressure off the 671. Let's just say this happens. And then bulls back into 700. Do I expect it to smash 700 this time round? The answer, based on what we're seeing right now, is yes. I do think so. It makes sense to do it this way. The hype is getting real again. The price hit the 700 like a bat out of hell, then failed. Is the volume, though, increasing? And that will be a question we have to ask ourselves today. There were a few big trades coming through yesterday. Now, I've added a new section to the private Discord community. Now, where was it? Large equity prints. So I put in some large equity prints here. And I can't remember where it was. There we go. So there was quite a lot of purchases of Tesla yesterday in terms of large purchases. And that's a pretty important factor that we want to think about. If large people are purchasing, then there's a good chance that it's the real deal. We want to see volume accompanied here, and especially volume accompanied if it gets past 700. Most of the price action yesterday was fairly bullish here, though. Again, even the price action near the end of the day was an ascending triangle. So think about this. You've got a series of higher lows. You've got an equal resistance across 3. That's an ascending triangle, guys, with buying into the end of the day. See the volume? Look at the buying coming through here. Big volume, ascending triangle. You've got to say that looks bullish. If I saw that during the trading day and then it broke like here at the end and I had a few hours left, you better believe that would be like a rally kind of signal for me. Yeah, that's not bad at all. Not bad at all. Thank you very much, Chris Pay, for subscribing. Sidols Lee as well for subscribing. Appreciate it all. We've got Ulrich Nielsen. Had to wait 12 minutes for the super chat. And DKK $20. Hey, Tom. I hope you're having a great day. Certainly am, sir. Thoughts on Katos? We'll check that out. By the way, did you guys see Eka Aurora? Big shout out to you, Eka. I might have to make you highlight. I'm looking at software that lets me highlight some of you guys' comments. You got a sick trade yesterday, man. I can't exactly remember the code. Let me have a look here. Great technical. You've found some good technicals recently. Let me just see if I've got that up here. I'm going to find it. Okay. ALB. Let's just go back and revisit ALB for a second. This was a sick trade, man. I want to show everyone why it's a good trade. So here, guys, you have a great example of a massive trend line coming through with a series of higher lows. Incredibly important. We have a lightning bolt, which is a peak, a trough, a high peak break. And we even said it yesterday. The thing that I believed so much about this and why it was going to breach out once you've seen enough of these technicals is you've got to think about what's the most recent price action telling you. Higher lows and a lightning bolt breakout. I don't care about that resistance. It makes sense for it to go into this high. This is a pure trade. I don't care what that company is. I don't know what it does really, but the break here into this movement, phenomenal stuff. Now, do I think there's any more in here? Not really. That's all I wanted. But from a day trade perspective, that's exactly what you want to be looking at. Very cool spot. Weekly as well made sense. Look at the weeklies. Bullish hammers. You were a patient beaver here, Eka. Bullish, bullish, bullish. Nice bullish hammer here. Closure above any previous high. That's the key. That's the key. It's the closure above any previous high. And again, I just want to reiterate for new viewers here that are coming through with the CPI numbers and worrying about the market. Based on what I'm seeing on the CPI, I don't think it's something we need to be fully concerned about. Now, will the market possibly pull back on it? It's doing so right now. I'm not concerned with that number based on where the CPI figures are. However, the market's digesting it. It's figuring out whether they think the Fed's going to maybe talk about tapering more and earlier, or just scaring everybody pre-market. I don't think it's big enough just yet. But does show you how good news is bad news at this stage. All right, let's do KTOS. Weekly, very undecided stock. Daily, bullish hammer, or at least bullish rejection off the date off the 20. Okay, that is a support level for it. Oops, let's not use the ray. Let's use the line. There we go. Nice. Yeah, it's probably about the right area. Let's go down to a 2 hour. Engulf. Not bad. Nothing spectacular. I think the participation for this one, Ulrich, will come in around 28.23 closure above. By that point, you've basically solidified the structure. You've got support, 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 support. You've seen buyers. My major concern is your volume is horrible right now after that initial breakout. So I want to see 28.23 daily close, and then that to push to 29. And then obviously you push past that, you could be looking at those highs all over again. Good luck there, sir. Gareth Benton, 549. Hey, Tom, what are your thoughts on oil WTI in the near term? Thinking of shorting it. Yeah, I don't really like oil anymore. I mean, I was a big bull fan of oil. I know oil for what it is. A nasty, manipulated asset class where you've kind of got to understand, what would I do if I was running a country that relied on oil? How would I manipulate the barrels in the best favor that I can? And because it's kind of done that way, and we're also quite far away from the weekly, my expectation here for oil is basically a sideways action. A fairly big wide range though. It hit the zone perfectly. I'm very, very appreciative of what it did. I'm super happy for guys that have been trading oil along with the channel because, you know what? Damn good. It was damn good. But yeah, for me, I'm waiting for this weekly to catch up, man. And whether it coils on the sideways like I expect it to within a range, or whether it kind of falls all the way back down to like a 68 level or something where the 20 is, I don't know that yet. If we go to like a 2 hour, you're thinking of shorting it probably based on this. You've seen a resistance. You believe that's a lower. And then, of course, if it gets underneath 73, you're probably feeling like it's going to 71. That's a valid plan. So 73 closure break to the 71, definitely a valid plan. Definitely great support levels, and yeah, a key area for it to be breaching through. So yeah, keep looking at it. I don't blame your TA at all here. I think that's absolutely correct. And this would be a little double top in the direction, obviously, to the short of 71. So if you're thinking about it, that's what you're looking for. I'm personally completely neutral, and I don't really care about the price at this stage from a trading investing perspective. It did what we needed it to do. Mohammed Kasim, $5. Hi, Tom. Can you help look at the NKE chart? I can't understand it. What are your thoughts? The problem with Nike is when you have an outstanding result like they did, where it gaps this high up, TA kind of goes out of it, and all you've got is a bunch of hype train trade. You need to understand the fundamentals and whether it's repricing. Now, I put this lines down a while ago, and when the news came out, and my expectation for the top end for Nike became about 165. So why did I control that? Because I basically took the range between the resistances and the supports. I treated it like a channel from that aspect, and then I just extrapolated that out. That's really the best I could go off. And at this stage, all you really got to do, man, is you got to go down to a 15-minute, look at the moving averages. Is there one that's being followed? Maybe go to a 1 hour, see if there's one being followed. Maybe it's the 20 for you. And as soon as this thing dives, remember, it didn't dive underneath here. It gapped under and bulled up. As soon as it creates a bearish candle underneath the 20, possibly you're like, I'm out, I'm bailing, I'm done with this trade. It's excellent, but yeah, you won't be able to understand the chart because all of the indicators have got to make up their way to it. That's how I broke it down, if it makes some sense. That is how I broke it down. Bitcoin. Ooh. Crap coin is what I'm going to call it for now, until it recovers to its point. Look, what can I say? That is a nasty looking flag, eh? All right. Firstly, I want to load up my nasty whale finder. Let's find here. Datamish is the program. Nasty whales continuing to add shorts. That's never a good sign for our beautiful Bitcoin, the Bit Noodle. This is not cool. I don't like it when they do this. Do you guys like it when they do this? It's pretty nasty. Yeah, look, I mean, basically they're ramping their shorts. And there's another ramp today, which led to a further short off. We know we're on support. We also know that from most technical gauges, this is basically a flag. I don't like to say that because if that flag completes, it's not going to be good. Let's see where it's predicting. Makes sense. I don't like it. Bitcoin is on the point that it has to turn around. And you know what? If it doesn't, this has to be a false breakout. You guys know I have no belief in the technicals right now for Bitcoin. The only thing I look for is specifically the weekly close. The weekly close, I believe, is the only key that we've got here on Bitcoin because it is in an accumulation sideways market. And like with any good stock, if a stock drops 20%, it's off my list for a few weeks, unless it's a tech stock, because this is what happens. It consolidates, it does nothing for ages, and you get your money stuck into it. Now, if you're the investor that goes, I'm going to buy the dip, I'm a value investor, I believe in this stock long term, that's fine. You can buy these levels if that's what you want to do. But if you want to trade them, don't get involved in the sideways shenanigans, because then you sit here going through the, oh yeah, whoa, I got that. Oh yeah, oh no, oh god, and then it's all bad. You don't want to be stuck in that. So if you're investing, okay, but at this stage, we've got a series of lower peaks coming through. We have it on support. It must bounce here if it's going to bounce. Otherwise, it breach under here and you open up the can of worms back down to the 30,800 level as far as I'm concerned. So it must bounce right here. Closure under here, I believe 38. And that will take Ethereum even lower. You know, Ethereum's degrading incredibly fast. It was leading the pack, never got that breakout above here. And now it's degrading even faster than Bitcoin again. Pretty disappointing stuff. So as we come into the market open, we have some interesting things. Firstly, Tesla is very heavily bullish here in the markets. You could tell it's a down day in the futures. Usually that would smash Tesla around 0.06%. Those new car sales as well in the CPI. Oh, not bad, eh? They were doing all right. We have the strange 15-minute ascending that came through. And I bet you if you take this, let's have a look. Let's take 2/3. Not quite. not quite to the 700, but this is pretty big price. We got buying into the close, buying into the close. It's a big equity prints yesterday with purchases in Tesla. It's looking the best it's looked in quite some time. And if I was going with a bigger than coin flip guess, which is obviously a guess, and you should never invest or trade off guesses, just my personal random thoughts. If I saw this type of chart, I'd be like, I would basically think that it's looking a lot more bullish than bearish. I would. It's done everything you can ask for it so far. Breaks the downward trend line, respects the upward trend line, respects the previous resistance. It's not bad. What do you think of death cross for Tesla? I don't care. I know, like, these the names of death crosses and moving averages crossing and stuff like that. I don't really see it as a huge thing anymore. I use a 20 and a 50 and a 200 simple moving average for one reason only. The 20 is definitely a mean reversion. You can see the price comes back. You can see how it interacts with it. I think the 20 is the one. The 50 is there just for crosses, and I know a few people do use it. The 200 is widely used. I don't care about crosses so much, but I do like knowing that I have moving averages as dynamic support or dynamic resistance. That's actually how I use them more than anything else. I use them as dynamic supports and dynamic resistances. If you don't know what that means, that's okay. Buy our course on fxevolution.com and check it out. Or go and do some Google searching for dynamic support resistance. I probably should put some videos out about it. But yeah, this is actually not looking too bad. For the first time in a long time, I can say that. Nasty, nasty Tesla. All right, let's go through some more stocks. What's happening now? What's Apple doing? Down 0.44. Nothing too much there. Let's have a look at Google. Down 0.23, whatever. Let's have a look at ARKG. Up, interesting. ARKK, down a little bit. AMD, we did before. Disney. Now, Disney. The sneaky cat, Disney, bounced hard yesterday off a weekly bullish hammer too. I probably should have bought that up. That bullish hammer was pretty sweet. So we had a bullish wick, a bullish hammer, and I've got to say, I had alerts set at 180 that triggered in the morning, and I was not around for it. I'll admit it. I wasn't around for it. I've been talking about the 180 for a while here. You know, I'm patient. I can be patient, Disney. If you're going to break and have all this trade volume on you yesterday, I can be patient and wait for you to pull back to the 180. Why not? But you'll still be on my alert list because I like that break. I like the weekly. I don't know whether it's coming back down to the 180 or 182, but somewhere in this range, I could see it bouncing off that level. And that was a pretty serious move that happened there. Bradley Back says JPM is waking up. Let's have a look at JPM. Wake up, Jamie Dimon. Wake up. Oh, there we go. So that pre-market down to the 156 that we saw before, they snaveled it up, sneaky pre-market traders. Just to reiterate on what we saw. So we had the announcement, looked pretty good. We've got a beautiful trough, peak, high trough, high peak level. And we saw the price actually go around 156.50, I think, or 156.30 pre-market, just literally like an hour ago. And then it's already bounced here and we're at 158.11. Nice. Geez, they're nasty, those Wall Streeters. I had a question coming in here from Jassa, who's a member in our private Discord community, and he said, "Hey Tom, are we expecting another pullback on the CPI data as an excuse for Wall Street, but more importantly, get the SPX nearer to the 20 MA?" I'm not sure what time frame you're talking about. Probably like a 1 hour or something. Yeah, I mean, look, that's definitely something that could be expected. Would I buy these current levels? I mean, we talked about the Dow before, and that's already bounced. You know, didn't quite hit the 50, but certainly off that level, it's already bounced fairly hard. If it's already doing this, I don't expect it to come back for more action. Maybe there's a lot of retail traders that trade the pre-market nowadays, so they might have already been scared off. But I would hope it doesn't come back. I'm not really expecting like this to be a level that I'm like, oh yeah, I love this level on the US 100. I prefer the 50. You know, I've said that for quite a few times. If you're going to take the 20, you're day trading. If you're going to take the 50, you're more of a swing base. So yeah, I prefer the 50 as a deeper pullback. I don't expect it to happen today because I expect the market to try to power on to these all highs, considering the banks had a decent report. But yeah, look, anything can happen. My expectation is optimistic bullishness for July with a hint of bearish garnish on the end. $77, $5.77 donation. Thank you very much, man. Tom, thank you for your confirmation. I have a few colleagues that are trying to revive the dead cat, being SPCE. You helped me confirm my outlook, mate. Yeah, look, Sandola, the problem with SPCE is look, I love space. I love all that stuff. I want to go to Pluto. I don't know why I want to. Actually, I always wanted to go to, what was it? Saturn. I always loved Saturn, probably because of the rings. Maybe I want to go into Jupiter as well. Jupiter's so big. Remember, I used to make it for school projects or whatever. But I love space. I love the idea, but I think it's too early to invest in. I know Kathy Wood rabbits on about it. To me, it's just too early, guys. And, you know, I've been around for the 3D printer during my career. I've been around for the marijuana. I've been around for a few AI technology becoming the next big investment, lithium millions of times over, iron ore millions of times over. The main thing that you want to always look at is, does it make commercial sense now to do it? The one thing that I must admit, I never believed that it was commercially going to run like it did, was probably Tesla. So you could say, oh, well, you know, she proved you wrong on that one. Yeah, true. But, you know, that's also up to whether you think that space can be commercially made. I don't believe it can be done that fast. Conscious, $1.99 LVS. Let's have a look. LVS. Las Vegas Sands. Yes, this stock. So all these Vegas stocks, which were all the talk of the town, really are sucking. Nothing cool at this stage about this. For me, nothing changes from last time when we talked about Conscious. I don't like the fact, well, the trend line was here. It obviously busted below that. I'm not a fan. I want to see serious recovery action before I even touch it with a 10-foot barge pole. I want to see this trend line on the down get obliterated to the upside. I want it above 53. I'm prepared to wait. I'm prepared to be patient because I don't want to buy the dippity dip. We want price action, at least a 52 plus closure breakout. I mean, look at this trend. It's hideous. It's not good. You know, trough, peak, high, trough, high, peak, maybe at 52. But again, I'm not a huge fan. But if you're a crazy person and you like to get into these, that's the level you're looking for. Nana, $5. Hi, Tom. Can you have a look at Futu or Tiger? They are likely to break below support. Futu. 7 minutes off market open, by the way, guys. For anyone that's worrying about the news, we had the CPI data come out. Overall, I think it's counteracted to a degree by the banks doing quite well. CPI showed the car number was insane. Let me just quickly click that again. 10.5 on the used cars and trucks. Wow. It wasn't a move to services like we thought so far. I still think that's very valid to move to services. And it mostly all came out of gasoline, of course, and then, of course, used cars and trucks. That's a crazy number. New vehicles too as well. This is insane. I still don't quite get that. But anyway, maybe it's time to bail town on the used cars and trucks. That's a big number. That is a big number. Futu. Yes, breakdown below this level was not good for this one. Weekly 20 moving average. So it's on the support of the weekly 20. It's probably looking to bounce. Isn't this a stock that's also in China? I don't never own Futu. We only talk about it here. I think it is. or somewhere in Asia. So 137, it's on weekly. This is the time it turns around. My thought process on it would be look for lightning bolts, look for some kind of confirmation that it's found the base. Maybe that's a 145 break past these 20 and 200 daily. And then once that happens, you'll get a recovery back to the 162. Let's have a look at the other one for you, which is TIGR. That's a fintech company. Very disappointing that's underneath. I don't own it, but that's a disappointing gap closure underneath. Wow, that's nasty, isn't it? Gaps underneath, keeps going down. I could see, maybe it bounces back to 23. It's going to have problems there. And if it does bust under a new low, all the way to $15.80 for me, daily 200 should support it. Look at the price action, smaller time frames, 2 hours. Again, you want recovery here, which is pretty much just going to push you into 23. And if you get a closure underneath that, unfortunately, yes, I could see a 1580 in front of that one. Doesn't look good at all. Okay, let's dial on in. We've got 5 minutes to go here for the market open. We've already got some recovery for the US 500. We've got the US 100 coming in with a 0.13%. It was about 0.2, 0.3 up, and now it is down. CPI did that. Dollar index is bulling. At the same time, gold is also going up. Strange, yeah. Dollar index doing pretty good here. Didn't look at it this morning, but that's not bad at all. Big move. 0.43% is quite a lot on the dollar index. Let's have a look at that in perspective of the weekly. Wow, imagine if it breaches. There could be a sick trade on the dollar index. I'm excited for DXY. Mostly because if you're invested from Australia unhedged into America, yeah, I want the American dollar to be strong, guys. Go up. American dollar, please. That's pretty funny. I would not mind at all if the DXY goes to the moon. That would be fine with me. We have a few other super chats coming in here, but basically speaking, I think some of the strength here could be in the Shanghai Comp today, specifically the beaten down tech stocks, the Baba, the Baidu. I know I've said it once before, but I'm going to say it once again. It just makes sense. We hit 200. We got monstrous FUD. We got, unfortunately, government intervention. And if it's not your jam, hey, that's fine. I totally agree with you. You also should see some movement from the banks. We saw JP Morgan and Goldman Sachs both breach new highs, pull back in the pre-market, and now move to new highs again. So we'll be looking at those. We'll actually add them to the list today. Let's load up the JP Morgan. Let's load up the Goldman. I'll select one of these. We'll select Goldman Sachs as one of the selections. 3 minutes to go. What do you guys want? I assume you want Tesla. And you guys pick the next one. What else would you like to see into the market open? Guys, pick right now in the chat, and then we'll do the rest of the super chats here. Kay Kennedy says, have we done Disney yet? I'm a bit late. We filled the gap yesterday. Incredible move, Kay Kennedy, on Disney. Yes, we did do it. My thought process here is if you're not in it, you kind of got to wait for it to go back to the 180. Weekly looks phenomenal as well. Weekly looks sick, man. Kay Kennedy super chatted $4.99 as well. Here's the morning coffee or nightly beer. Thanks, bro. Here's to a great day. By the way, my name is Chris. Thank you very much, Chris. My username is due for a change. Oh, no worries, Chris. Thank you very much. You guys want snow? XLF. XLF is a cool pick. I wouldn't mind seeing XLF. 5 minute chart. We've got the QQQ already up. Here we go. We've got 2 minutes to go here, guys. XLF is an interesting pick here this morning. Where's the Goldman Sachs? Goldman Sachs 0.6% up pre-market. Not bad at all. Testing out these highs here. You can see 382.40. And I kind of, because we've got Goldman, we'll just use, what else did you guys want? SPX, FANG, Tesla, we have that one. Snow. DXY, time to sell some US dollars. No. Tom, no crypto. I covered Bitcoin, man. I covered Bitcoin. Bitcoin is at the precipice of disaster. So it must hold this line. Hold the line, guys. Otherwise, you're going to 30,800 as the next level of support. So we're 1 minute off the market open here. It looks like a fair bit of recovery's come through with the CPI. It's all in two sectors. I don't think that is as horrible as the number initially looked. You saw that shock reaction of the algos coming through. Then they went and looked at the report. The report said used cars and trucks and fuel and gasoline, okay. We also saw new cars also have a very big increase here too. Not bad at all. But overall, the CPI number, I don't think is too bad. Here goes the bell. We're open. There we go, guys. We are open on the bell. What is going on? Tesla starts off strong here. As we suspected, this has got a little bit of guts behind it. Let's see if it can power to the 700 level in the first 10-15 minutes. We've got Goldman Sachs testing off the resistance. Let's have a look at JP Morgan quickly over here as well. JPM. Let's check out what's going on there in the banks. JP Morgan, okay, comes in 1.18 down now. So that's actually underneath. Let's have a look at this 15-minute time frame here. So that's the futures. So it's basically back on the support that it was pre-market. Let's see if it can turn around. Here's the rest of the stuff. We have US 500 opening up 0.15 down. US 100 Nasdaq 0.13. Most of the hyper stocks are down in the morning. Is there anything up? Starbucks. Where's Disney? Disney. Uber's up. Chinese tech stocks are up here. They're probably the best. Baba, Baidu, JD, Okta as well, up 1.21%. I want to look at Okta and Snow. US 100 starting to rally there a little bit. Let's have a look if it can break a new resistance. I want to look at Okta. Go the daily. Okta's in a lot of chop. But I like having that many moving averages behind me. 200, 20, and 50. Series of higher lows as well on the higher time frames. Okta's really trying to get the business done. See those higher lows? Little trend line there. I do hope it can breach. 50 exponential being the support as well as the trend line itself. So interesting on Okta. Look at the Weeble. Okay, big percentage changes. AMC down to 40.46, right on that first support that we found. Very critical day. AMC holds above the 40 line. If it can't, that will be a big deal to the downside. Let's have a look at the screener now. Percentages here. Okta, number one leader, 2.1%. Got Baidu, Electronic Arts. Ugh, boo. Boo. Electronic Arts. Get out of here. 143. I did buy a game though. I gotta say I bought the Battlefield game, so I guess I supported. I couldn't not do it, guys. Pre-ordering is bad, but I did it. I felt like playing a game again. SE, one of my favorite stocks, back to 280. Very well, nice. They got cool ads, guys. I think the best ads of any of these nasty internet companies. We've got Roku, CrowdStrike, Amgen, all the ones that were actually down a little bit before have moved to the bullish side. Boeing still down. JP Morgan, even with a stellar result, doesn't look like Wall Street loves it as much as maybe you would think. This always comes into that idea that, remember, it's an 8 out of 10 result they want. I haven't really read through the result. I don't know where their expectations are. I don't think it's that bad. This could turn quite easily and end up with a positive. But again, I haven't looked at it. Walt Disney down almost 1%, down to 183. I'm looking for that to return back to a 181, ideally, and then looking for buys off that level, 180, 181. So this morning, it's an up and down all around day. As expected, we do get that rally coming back in from the indices. The Dow rallies, the US 100 rallies, the US 500 rallies. Thank you, Chris or K Kennedy, again for the 2 donations. And with the Disney, I'll just quickly bring it up for everyone. What I'm looking for here is a pullback back after a very massive rally. Pull back to this zone, pick up off this zone, and hopefully then movement towards that 190, maybe even 200 level. That's a phenomenal crack. And if we think about it from a weekly perspective as well, You were completely correct here with that big bullish hammer and rejections before. That's a great flow through trade. I love that break. And I actually got an equity print early as well from the robot showing that the big trade is coming in. And yeah, they certainly got it done. Knock knock coming in, US $2.99. Major Tom, let's squad up. Battlefield 2024. Is that your hashtag, man? Or is that actually the name of the battlefield? I don't know, man. I might have the boomer eyes now. I'll have to get out my nerd goggles, which I have here. Got my nerd goggles, guys. Gunner glasses. Yes, I wear these nerd goggles because I'm blind. And do I dare put them on? I don't even think I can with the headphones on. Maybe we'll put them on next time. But yes, I've got them ready. I'm ready to perform terribly in that game. What's going on now? I think it's going to be... feeling bullish. But the market is still, you know, got some shenanigans to play out here. Let's have a look at the price action on the 5-minute chart. 5-minute closes higher, hits the moving averages, comes back down. How's Tesla going? Down a little bit. Okay. Tesla rallies. Oh my God, when it rallies so hard. Look at this nastiness. Rallies super hard, completes the ascending. Let me have a look here. 2/3 is an ascending. Did it complete? Barely. Didn't even. So nasty. That's why I would never trade on a 5-minute chart with Tesla. Let's go to the daily. Gotta be nice if it gets above that level. Closure break above 690, then we can say, okay, we're gonna get past 700 the next day. I'm looking for a 690 plus closure daily, and I wouldn't be sad if it came back here and picked off that level either. AJ, $5. What price would you try to buy Tesla at? From an educational standpoint, you'd be looking at 670, 671. The reason why previous supports, so go to the 2-hour chart and you've got previous supports, you're going to have the 20 moving average there as well. And you know it's been respecting the 2-hour because you've got lots and lots of weird support here on the 2-hour, and then you've got a little bit of resistance. So let's say theoretically they met in heaven around 671. That would be the zone that people would start to pick it up. From a breakout perspective, probably any daily close above here. And of course, 700 is the key zone. Thank you very much, AJ. QCOM sideways for like a week now, says Scott Morgan. Yeah, people are pissed off at me about the QCOM pick. It's not that bad. It's not that bad, guys. No. I quite like the QCOM still. You got to be patient, like a patient beaver when you're in swing. You know, I like the resistance break. Obviously, really loved the pullback. Got back a little bit deeper during that pullback recently. Semiconductors started firing yesterday, and it's floating around. It's kind of like snow the other day. You need it to get about 144 to trigger the extra buyers. All you need on QCOM is 144. Then you'll have a little smiley face. Okay? Smiley face. All right. Okay. Well, that pretty much brings us to this market. I think most of the flow is going into the Chinese stocks at this stage. I think the Okta is also starting to fire up here a little bit. I quite like the price action on Okta, the series of higher lows. I like the 50 exponential and that moving average. I also like having all this as dynamic support behind me. It gives me a happy feeling when I have that much guards on my price action. It's really, really important to do that. Marvin the Marsha says, where are the diamond hands on QCOM? Yeah, that's right. Scott Morgan's is saying, all right, man. Yeah, it's all good, Scott Morgan. I know QCOM is a slow, horrible thing. When you trade a boomer stonk, you know it's going to go low. Okay, it's going to go like this for ages. If you're trading a hyper stock, it's going to react very quickly. If you're trading one of those boomer ones, it can take a little bit longer. This was a request here, Taiwan Semiconductors. Yeah, these TSM looks good as well. Another excellent breakout. Daily break yesterday. like all the semiconductors, they're all showing the right signs technically. You know, this is the right thing. Resistance, 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 breakout. That should lead to further bullish pressure. QCOM, TSM, beaten down semiconductors. The whole semiconductor index, you know, if you look at the whole semiconductor index, where are we? Let's go SMH. You'll notice it's all kind of breaching to the new high, and it did breach out, shook out a whole bunch of people, and then we should be still looking at further bullish movements. So I like this sector at this stage. That weekly gives me relative confidence. Massey says, Tom, would you be able to look at big for me? I'd like to re-entry, but not sure right point. I'll check that out for you, man. Big Industries, I assume it is. Okay. You give me a tough one, sir. Okay. No. I don't know. 62.5, I guess. I don't even like these trend lines I just drew. 62.5 for me on the big. Let's do snow. Continues to power on here. Excellent breakout. Excellent powerhouse. 2.13% up. Yep. Great daily yesterday as well. Look, snow is on fire. We've spoken about this quite a few times. I'm looking for snow into the 300 bracket. Ideally, I think it could have problems at 290. But, you know, with this kind of price action where it is, it's unlikely to stop at the 280 kind of level. I mean, that's the level, but I want it 300. 300, damn it. Let's go with snow. 300. Why? Because I see it as a giant inverse head and shoulders, which I've talked about. Left shoulder, head, right shoulder. And you take that neckline and you extrapolate it out. It's pushing even more than 300. So it's a phenomenal trade. I was waiting and being patient like a QCOM on this one, and it finally got it done. Jersey Gal says Sundial just fired. We don't look at that stock here. And then a few people want me to look at Snap. We'll do that quickly. Nasty Sundial. Snap's actually not bad. Resistance, breaks above, comes back. Bearish candle fully destroyed by this bullish one, and we're back at the kind of support line. Yep, if it's going to fire, it fires here. Absolutely. I'll add Snap into the list for the next coming days. Check that out. Do I think that this is worth this much money? No, I do not. No. Nasty Snap, I don't believe is worth that much money, but yeah. All right, well, JD had the best technical, and it seems to be doing the best. It's the percentage, so I'm happy with that one. And hopefully you guys are doing all right today. We leave the market with a little bit of red on it, a tinge of red. US 500, US 100, US 30 all down. It wasn't as freak out mode as many people probably were going with the CPI, but we are still looking for slightly bad news and on the news being the best news for us, because we don't want the Fed to take away our beautiful stimulus. Not just yet, guys. We need them to do it over time. They can't talk about tapering just yet, but tomorrow brings us all extra problems. Let's have a quick look here at what's ahead of us. We scroll through. FOMC member Bostic speaks soon. Whatever. I don't even know who that guy is. Then we have tomorrow, 12 p.m. ET, New York time. Fed Chair Powell testifies. Ooh, I don't even like it when he opens his mouth. But you know what markets tend to have done? I believe markets have generally run bullish into his announcement, bearish during him talking at all, and then bullish again afterwards. I think that's what's happened. If we look at the statistics, when he talks, bad things happen. When it's over, decent things happen. And the day before tends to be bullish. I believe that is actually a stat. You guys can find it out in the rooms. Thank you so much for joining us today. Thank you to the 1,200 people still hanging out here into the open. Appreciate each and every one of you. And to all the new subscribers and everyone that's helping out the channel, you guys are awesome. Appreciate it, and bye for now. I'm coming back. Got this question from Doily. I don't know why I read your one particularly, but no worries, Doily. I try to read the comments as much as I can. There are a lot of them. And you can see here, I said, you looked at EAT a week ago. Can we have a recap? Yeah, that's sweet, hey. Beautiful downward trend line, breakout. Market is down a little bit here on this EAT, but yeah, that's a trough, peak, high, trough, high, peak, break of a downtrend line. Nice, dude. Previous resistance, weekly bullishness, long leg doji, currently looking bullish. Yeah, it's good, man. I'm going to add EAT. Brinket International. I have no idea what that is. EAT can go over here. I'd probably want to find out more about the company. Worth $2.89 billion. Restaurant. Okay, cool. Catch everyone. Left field says second helping of EAT. That's right.